218 million bushels. China's U.S. soybean purchases January through August 2025. In the same window a year earlier, 985 million. The gap is 767 million bushels. And in October 2025, peak U.S. harvest, Chinese purchases hit zero. Zero. At the exact moment American fields were coming in at record pace, the largest buyer on earth stopped buying. The media covered the tariff dispute. What they missed is what happened next. And that is the story the data tells. U.S. ag exports to China, $17 billion in 2025. Down 30% from 2024. Down more than 50% from 2022. USDA projects $9 billion in 2026, lowest since the 2018 trade war. In 2012, China bought $25 billion in American farm products. That was 20% of all U.S. agricultural exports. The contraction has been running for over a decade. 2025 accelerated it to a new floor. American farmers still planted, still grew. Per USDA WASDE, the U.S. produced a record corn crop of 426 million metric tons in 2025. The land did not stop. The buyer did. October 2025, peak harvest window, zero Chinese purchases, not reduced, zero. Per USDA export data, Chinese buyers placed no new orders for U.S. soybeans during the month American farmers were cutting the most acres. If you want to see the real numbers behind the headlines, subscribe to the Data Desk and hit the bell so you never miss a breakdown. When the buyer that took half your soybeans walks away, where does the crop go? The answer is in the USDA export data, and it involves 90 markets, 4 continents, and a 12.8% year-over-year increase in total U.S. soy export value. Per the U.S. Soybean Export Council, February 2026, China's purchases across 5 years. The line holds through Phase 1, holds through 2022, then collapses, from 985 million bushels to 218 million in 8 months. The October 2025 data point is zero. The U.S. Soybean Export Council has been building alternative markets since the 2018 trade war. When China walked in 2025, the routing infrastructure already existed. This was not improvised. While soybeans contracted, corn went the opposite direction. U.S. corn exports, 78 million metric tons in 2025, up 8% from 2024, per USDA WASDE. China did not buy American corn in 2025 either. The 8% gain came entirely from other markets. Southeast Asia, Vietnam, the Philippines, Indonesia, rising middle class, more meat, more feed grain. Vietnam up 89% in U.S. soy purchases over 5 years, per USB 2026. That demand does not depend on Beijing. 2025 was not a crisis for American agriculture. It was a test. China stopped buying at harvest. The data shows what American farmers did next, and it involves a 7-year investment in 90 markets that the mainstream never covered once. Which 5 markets grew fastest? How much of the gap they covered? And the crop that went up while soybeans went down. Part 2 has the numbers. The total U.S. soy complex, whole soybeans, meal, and oil, exported 68.7 million metric tons in marketing year 2024-25, up 12.8% year over year, valued at $29.6 billion. Per U.S. Soybean Export Council, February 2026, China reduced whole bean purchases. The broader soy complex grew. Those 2 facts together are the story. Turkey, plus 342% over 5 years. Vietnam, plus 89%. Venezuela, plus 68%. Colombia, plus 48%. Bangladesh, plus 40%. per USDA GATS 2026. Not backup buyers. Structural demand partners built over 7 years of deliberate, farmer-funded market development. Turkey's jump is traceable to a single event. From 2019 to 2020, Turkey restricted GMO soy imports. U.S. exports collapsed. When the restriction lifted, pent-up demand drove the 342% rebound. The market was cultivated, waited out, and re-entered. That is not luck. That is a 25-year investment in relationship infrastructure paying off exactly when it was needed. Turkey is now a top 10 U.S. soy destination. Its processing industry rebuilt supply chains around American product. That relationship is structural. It does not reset when China changes its order book. Vietnam's 89% growth tracks directly to rising protein consumption. More poultry, more feed. U.S. soy is the preferred source. Each kilogram of chicken produced in Southeast Asia is partially fed by American grain. Soybean meal is where the volume holds. U.S. meal exports hit 16.3 million metric tons in 2024-25, a record per USB. Meal buyers are Southeast Asia, Latin America, and the Middle East. They grew regardless of what Beijing did. 2012, 25 billion, 20% of all U.S. ag exports. 2018, 9 billion. 2022, recovery to 32 billion. 2025, 17 billion. 2026 projected, 9 billion. The same floor, twice, over 14 years. Not a disruption, a structural compression. The U.S. Soybean Export Council operates in 90-plus markets, built over 25 years of farmer checkoff funding. When China stepped back in 2025, that network absorbed the displacement. Not fully, but enough to prevent what Purdue's FarmDoc called a potentially catastrophic outcome. The 13% decline in total soybean export volume is real. The infrastructure absorbed the shock. It did not eliminate it. The question is 2026-27, and 3 things just moved that math. Egypt is now the 4th largest U.S. soy complex destination. North Africa is a structural growth zone. Rising population, rising protein demand, preference for U.S. soy quality over competing origins. It is not a temporary reroute. Argentina's crop is shrinking. 2 new U.S. crush plants just opened. And $14 million in federal trade promotion funding was allocated April 17, 2026. Each of those 3 inputs changes the 2026-27 soybean equation, and the data on all 3 is in Part 3. 3 inputs changed the 2026-27 equation between late 2025 and April 2026. Argentina, domestic crush, federal trade funding. All 3 move in favor of American farmers. Argentina is the supplier China leaned on when it reduced U.S. purchases. For 2025-26, USDA projects Argentine soybean production to drop 5% to 48.5 million metric tons, stocks at decade lows, soy meal output down nearly 3%, soy oil down 13% per ag country December 2025. China's preferred alternative just got smaller. Argentina, 2025-26, 48.5 million metric tons, down 5%. Soy meal, down 3%. Soy oil, down 13%. Stocks at decade lows. The alternative China has been using is producing less. That is re-entry space for U.S. supply. U.S. domestic crush is moving the other way. 2 new plants opened fall 2025, Nebraska and South Dakota. USDA's 2025-26 crush forecast, 2.55 billion bushels, a record per ag country. More crush means more meal and oil entering export markets as value-added product, not raw beans competing against Brazil on price. 2 new U.S. crush plants, Nebraska, South Dakota. USDA's 2025-26 crush forecast, 2.55 billion bushels, a record per ag country. More crush means more meal exports, and meal buyers are in Southeast Asia, the Middle East, and Latin America, not Beijing. Brazil benefits when China leaves the U.S. market, but Brazil cannot match U.S. meal and oil processing infrastructure. As Argentina contracts and U.S. crush expands, the product mix shifts toward American value-added exports, the category where U.S. margins are strongest. On April 17, 2026, USDA FAS allocated $14 million through the new America First Trade Promotion Program to the U.S. Soybean Export Council. Target: demand development in South Asia, Southeast Asia, and Africa. The same strategy that produced Turkey's 342% growth and Vietnam's 89% over the previous 5 years. May 2024, 6 million metric tons. May 2025, 8.5 million. October 2024, 4.5 million. October 2025, 8 million. U.S. corn exports nearly doubled in key months year over year, with 0 Chinese purchases in either year's figures. Corn is the hedge the headlines missed. 78 million metric tons exported in 2025, up 8% from 2024 per USDA WASDE. None of it went to China. All of it went to markets built while the tariff coverage was running. 78 million metric tons of U.S. corn exported in 2025, up 8%, 0 from China. The farmer who lost a soybean buyer did not lose the corn market, because the corn market was somewhere else entirely. Cash receipts from crop sales projected to fall 2.5% to $236.6 billion in 2025, lowest since 2007 per American Farm Bureau. Diversification absorbed the shock. It did not remove the income pressure. That is the honest number. The USDA 2026-27 projection, 1.7 billion bushels in soybean exports, up from 1.58 billion, a partial recovery built on Argentina shrinking, crush expanding, and $14 million in fresh market development capital. What the full recovery math looks like and what it means for every farm state that held through 2025. Part 4, $29.6 billion. Total U.S. soy complex exports in 2024-25. $22.3 billion in whole beans, $6 billion in meal, a record, $1.2 billion in oil. What 90 markets across 4 continents produced in the year China walked away? The meal record is the most significant number in that chart. Meal buyers, Vietnam's poultry sector, Turkey's processing industry, Colombia's protein market, built supply chains around U.S. quality. Those relationships do not reset when Beijing changes its order book. 1.7 billion bushels projected for 2026-27. Recovery driven not by China returning, but by the 90 market network holding and Argentina's supply gap creating re-entry space for U.S. product. The One Big Beautiful Bill Act created a new agricultural trade promotion and facilitation program, $285 million annually starting 2027 per American Farm Bureau. That is the pipeline for the next Turkey and the next Vietnam, built deliberately, funded federally. Cash receipts from crop sales, projected at $236.6 billion in 2025, lowest since 2007 per American Farm Bureau. The diversification absorbed the volume shock. It has not yet absorbed the price and margin pressure that comes from competing without China as a floor. That is the honest number. The job is not done. Bangladesh, plus 40% in U.S. soy purchases over 5 years. The $14 million AFTPP allocation on April 17, 2026, targets South Asia, Southeast Asia, and Africa, building the next structural buyer relationships over the next decade. 218 million bushels to China instead of 985 million. Record corn crop, record meal exports, $29.6 billion in total soy complex value. The harvest came in, the market held, not luck, American farmers built it. $29.6 billion in soy complex exports, 16.3 million metric tons of meal, a record, 78 million metric tons of corn, up 8%, 1.7 billion bushels projected for 2026-27. Those four numbers are what American agriculture delivered the year China stopped showing up to the harvest. The mainstream covered a trade dispute. The data shows a 7-year investment in 90 markets that absorbed the largest single buyer exit in U.S. agricultural export history and kept total soy complex value growing while it happened. American farmers did not wait for Beijing. They found somewhere else to send the harvest. What story should we break down next? Drop it in the comments, and we will see you in the next data file.